Everybody's talking about how the Mavs beat the Rockets, but the market didn't move because of the game. It moved because of oil. If you work a 9 to 5, here's why that actually matters. This isn't about conspiracies or secret deals. It's about supply, incentives, and expectations, and how markets react to them. Venezuela has some of the largest oil reserves in the world, but sanctions, infrastructure, and politics have limited how much oil actually hits the global markets. When there's talk of easing restrictions, licenses, and cooperation, markets don't react to what already happened. They react to what might happen next. Markets move on expectations, not headlines. More potential oil supply means less pressure on energy prices, lower inflation risk, less stress on consumers and businesses. That's why stocks react positively even before a single barrel of oil moves. Bitcoin often moves alongside risky assets. When markets feel relief, whether it's inflation easing or supply improving, Bitcoin can move too. That doesn't mean Bitcoin caused it. It means sentiment shifted. That keeps Bitcoin at context, not the star. If you work a job and invest on the side, you don't have to chase news. You don't have to chase headlines. Most people lose money because they're trying to trade off the biggest headline and they overreact to news. You don't need to react emotionally. Short-term moves don't change long-term plans. These headlines matter over time, not overnight. Most investors lose money not because they miss the news, it's because we overreact to things. We get one piece of information and we like to put a whole bunch of bets on it, and we like to put a whole bunch of emotion on it and thought into it. This is why patience matters. Headlines come and go. Systems move slowly. When your plan only works when news is calm, it's not really a plan. You don't need to predict geopolitics to build wealth. You need consistency, time, and perspective. That's how 9 to 5 investors actually win. The part about investing nobody really talks about, you don't get to react in real time. Most things that happen, somebody else tells me before I get to realize the news. You're in meetings, you're answering calls, you're taking care of family, life bills, and not watching your portfolio move while you're stuck at work. That can mess with your head. I used to think that was a disadvantage, but honestly, what saved me from overreacting and staying attached to the markets was because when you don't have time to panic, you're forced to rely on your plan, your long-term plan. Over stimulation and doing things, always got to catch the next biggest stock and trade, and you always got to go. It makes you overindulge in things, and that's how you start blowing up things, and things start going against your rate, and it showcases your greed. And that's where most people mess up, not because they don't know enough, but because they react too much. Every headline makes them feel like they're late, like they missed something, like they need to do something. But most of the time, doing nothing is the move. It's trusting the long-term process. That's uncomfortable part of being a 9 to 5 investor. You don't get the adrenaline, you get patience. The hardest part of investing isn't picking the right stock. It's surviving the part where nothing is happening. That feeling will eat you alive. Most people don't quit because they're wrong. They quit because it's boring, discouraging, and quiet right before it works and they become profitable. If you work a 9 to 5, you know this feeling. You're waking up early, you're clocking in, You're handling responsibilities from your slave master. And somewhere in between meetings and lunch breaks, you're checking the account. You're looking at the stock that's moving highest, lowest today. That's when the doubt creeps in. You start asking yourself questions like, am I even doing the right thing? Why is everyone else making money but me? Should I switch strategies? Should I just pull this out and do something else with the money? Here's a real reason most 9-to-5 investors quit before they are profitable. We don't quit because the plan is bad. We quit because the plan doesn't give us feedback. And humans react off response and feedback. We don't know that we're doing something that's satisfying until we get validation from it. At work, you get feedback with your supervisor. You have one-on-ones. They let you know what you're doing right and what you need to improve. You get a paycheck. You get reviews. You get deadlines. In investing, you just wait. In basketball, you get feedback from your coach. You see what's working in your bag. Whenever a crossover, you see whether the defender bites, he tries to hit you with a reach in, or he moves his feet. We see responses with things. No feedback feels like failure. Nobody talks about how uncomfortable time really is. Time exposes impatience. Time exposes insecurity. Time exposes comparison. Because while we're waiting, somebody else is posting their gains, showing how much money that they just made, that is feeding the family. They bought him a new house. They bought him a new Rolls Royce. Somebody else is talking about the next play. You're sitting there thinking, what am I doing wrong? I remember checking my account before work, then going on lunch, then again after I got off, same numbers. Day after day, I'll get either consistent losses, that's from me buying in whenever the market opens and then selling by the day ends. Day after day, just chasing that next position that will bless and cure my account from losses. And that messes with your head when you're already tired from work. This is where most people mess up. They don't quit investing, they quit their strategy. They jump from long-term to short-term, from patient to reactive, from calm to chasing. Not because it's smarter, but because doing something feels better than doing nothing. I remember when I started off investing, I was putting in a quarter chunk of my checks invested long-term into the markets. I would not see no losses. It was profits going in for me just being patient and buying and not having to buy and sell within the days. It's happens until I start being impatient is where I start seeing losses. I start seeing those signs that I should stop doing this strategy because it's losing me money and I can't afford to eat out because I lost my money in the stock market. This is a gambling addiction.